Welcoming on board Rajat Sharma from Securities to talk to us about what he makes of the market. Rajat, let's begin by discussing the metals basket, right? That's one of the top leaders today. Is that a space that you like? And if yes, within that as well, ferrous, non-ferrous, where does the preference lie?
Yeah, so the only stock in the metal space which I ever owned was the Steel Authority of India, and right now I don't have any metal stocks in my portfolio. I find, apart from metals, actually I find pretty much all pockets of the market very, very expensive, and I think the right thing to do in such market would be actually to reduce your allocation to equities, and that's what I've done for many of my client portfolios. Other than that, now, of course, there are clients who are very high risk takers. They want to stay invested for 4 5 years. That may be a different thing. But broadly, I've actually taken some money off the table. So for most of my portfolios, I'm holding about 40 to 45% in fixed income bonds, and I've allocated around 8 to 10% to gold as well. So that's the main change I've made to my portfolio in terms of the stocks and allocation. My core portfolio has remained the same. I think most of the stocks that I've had or I have in a lot of my client portfolios, I've spoken about all of them: ONGC, ITC, Lupin, Infosys, Gulf Oil, Federal Bank. These are my core portfolio holdings, and I've not changed anything. I've just reduced overall allocation to equity, but in terms of the stocks, and these is very important to give a full disclosure. So I'm holding all of these stocks. I've not added anything in the last 1 or 2 weeks or 3 weeks. I've held these for a long time, and yeah, I continue to hold them. It's just the allocation between equity and debt which I've made changes to.
That's the view on metals and a whole host of other names. Metals, of course, surging up to the highest point in the day. SAIL is up nearly 7.5% right now. You've got a Jindal Steel, which is up 6%. Tata Steel higher by 6%. JSW Steel holding out very well. And even Hindalco has made a decent move of about almost 3% right now. Vishali, just wanted to understand whether after this big move on any of the metals names, you see a continuation of the trend or follow through come by.
Well, I would actually think so, because overall metal sector has done pretty well, and stocks like especially SAIL or NALCO, in fact, even as far as Hind Copper is concerned, I am watching these stocks quite minutely, and I think SAIL, sometime back, it had given a monthly breakout about 133, 135, and now we saw some retracement occurring in that. So once SAIL also sustains about 135, 138 levels, I would be pretty bullish on this stock for a target of 150, 180 for a longer term time period, of course. And today we saw good pickup coming in Jindal Steel and Power, JSW Steel. And let's talk about Hind Copper. The long-term trend is so bullish, and I think 230 acts as a crucial support. Today we saw a good run-up coming in. I think in all likelihood, this stock can go towards 320, 330 levels in times to come. So my view for now in all metal stocks stands positive. Even Tata Steel has given a breakout. So yes, Tata Steel, I'm looking at higher targets of 170, 180 from here on. So overall, I'm bullish on metal sector.
Okay, that's the take coming in on metals. In fact, India is not just considering a ban on export of iron ore to China. That's the word coming in from the Steel Secretary. In fact, speaking with my colleague Aishwarya Patil, he also said that iron ore exported to China is mostly low grade and underutilized in the domestic market.
Ore is exported, it's not the high grade iron ore, and low grade iron ore is not being used by our own steel mills. So steel ministry is not considering any such decision at the moment. Steel production consumption outlook, I mentioned in the calendar year 2023, the production was somewhere around range of about 127 million tons. I mean, if one takes economic growth, the numbers are at about 6.5%. The buoyancy factor is about 1.2. So we should see the growth in these areas to be about 8% or so. While in terms of exports, it may be difficult to give a particular number because a lot of it depends on the global your strategic situation.
We got Rajat Sharma with us, and Rajat wanted to get your thoughts in on autos right now because, it's quite a polar end, what's really happening in the farm equipment segment and what's happening at PVs. But wanted to understand, would you take a contra bet here and bet on any of the farm equipment majors?
No, not really. But if somebody was building a portfolio in this market, stocks like Maruti Suzuki and Tata Motors are still not very expensive. Now, I'll tell you why I say that. Sometime back we were talking about metals, and I said one of the stocks that I had in my portfolio was Steel Authority of India. Now, the reason why I exited that was that stock has never traded above 3 to 5 to 6 on a price to earnings multiple number. And right now, it's trading at 17.5. So you all know what's the right thing to do in this market. It's just tempting to stay invested because the stock prices are moving high every day. Now, talking about Maruti or Tata Motors, like if you look at their price earnings multiples, if you look at the valuations at which they're trading, they're still not trading far more expensive than they have in the last 10, 12 years. Maruti Suzuki, for example, is trading at a multiple of 38, and that's where it's always traded. So that means, stocks like these have an improvement in earnings because of which the valuations are still good. But there's a lot of sectors like metals in particular. Now I know it's really tempting with the way things are happening today, even in Bank Nifty, to get tempted and buy there. But the right thing to do would be to stay away and reduce your allocation to some of these overvalued sectors.
Okay, point taken. I also want your view regarding healthcare and insurance with the latest news flow there. But first, let's go across to my colleague Anurag because he's getting us the latest on this developing story. Anurag, last time we checked, the government had sought the data of various hospitals, from the hospitals as well as insurers, to get a sense as to what the price range is of the various treatments. What's the latest that you are hearing on this?
So, as the Supreme Court has asked Union government to come up with a standard treatment rates within a 6 weeks period. So, it's otherwise Supreme Court may go ahead and implement CGHS rate. So, it's a tough task for government to come up with a standard rates in a 6 weeks period. So, in this context only, insurers, non-life insurers are ready to share data range or rates range to government because non-life insurers have a tie-up of with 40,000 hospitals, cashless tie-up with the 40,000 hospitals across the country. Majority of the hospitals are covered under their arrangement. So in the cashless arrangement, generally the prices are cheaper than the normal treatment charges because they come up with a standard rate on the procedures. So across the country, they have a tie-up with 40,000 hospitals, and recently non-life insurance industry has launched a new initiative, Cashless Everywhere, where all the insurance companies are also sharing their data and their arrangement related to the hospital. So the non-life insurance companies has offered these standard rates because this can help government also to arrive at the standard rates because Supreme Court has categorically asked Union Health Secretary to come up with standard treatment rates, and we have seen that a lot of traction also seen in hospital stocks, healthcare companies, and insurance companies are also getting insurance company think that they will get boost from this warning by Supreme Court because the overcharging by hospitals will go down. There will be parity in treatment rates, so they are ready to share their standard rate data with the government.
That's the latest, the data being collected for now, and that will decide the future course of action. But for the immediate course of action, what should the investors do? Rajat, what's your view?
Yeah, so one of my top holdings is Lupin. That's a stock which I've recommended multiple times on your channel. But other than that, I don't have many stocks from the pharma or healthcare space right now. On insurance, I may be biased here, but I don't buy insurance companies in India because I think most of what had to happen in the insurance space has already happened. And the competition is too intense for any of the players to sort of deliver very positive returns. There are way too many insurance companies, and the market size is now not growing at the rate at which it was growing until about maybe a decade back. So, no, I don't like insurance as a sector, so I've never held a stock there.
Okay, that's the take coming in on what to pick out from within the pharma as well as healthcare space. In fact,